some perspective on what's happening in the primary market. So IPO mania is back. In 2021, markets overflowing with liquidity, a whole crop of new retail investors. So why would companies not rush to mop up some of that money? That's exactly what's happening. In fact, just this week, you have 5 interesting issues which will hit the market and which are in various stages right now. Nazara is one of them. Kalyan Jewellers is another one of them. And there's several which are out there. But how do you choose the right one? How do you choose the right one, and is it really worth your while? So we're also going to bring you data on how some of the IPOs which saw light of day in 2020 actually fared. To speak to us on this, I'm joined now by Mahantesh, Sabarad, SBICAP Securities, and Mrin Agarwal, founder director of Finsafe. Welcome to both of you. Great to have you on the show. Mahantesh, let me begin with your take overall on the kind of spew of IPOs we're seeing and which ones look exciting to you.
So, there are these new age technology kind of stocks that are coming up in the IPO market, and that is what is going to be interesting to watch. It's not about really a debate about old economy versus new economy. Even certain old economy stocks are adopting digital kind of mechanisms and transforming themselves into a new age kind of company. So the first choice, if one were to do a top-down approach on which IPOs to look at, will be from the perspective of the technology aspect. Are these companies going to transform themselves into a new age technology-driven kind of company? So the choice will be obviously led by that. And obviously the other choice, therefore, will be how sustainable is the company prospects are going to be in future. Remember, we are still in the midst of the pandemic, and many of the companies, including those listed, already are underperforming relative to their past performance on the revenue front or on the profitability front. So some of these companies, IPO companies that are coming up, actually are those companies who don't necessarily have that competitive backdrop for investors to really understand. One has to pour into the financials to understand what kind of growth they are delivering. But suffice to say, choice number 1 has to be driven by the technology transformation they are undertaking. Choice number 2 will be driven by what kind of year-on-year growth they are delivering for sustainability to be seen.
I wish it were that easy. I wish it were that easy, where you could just give us a broad outline, because I'm going to ask you to talk about the IPOs this week and tell us which ones you think are better placed, because we've promised our viewers you're going to help them pick the winners. So let me take you through the options that you have to talk about. Kalyan Jewellers, Craftsman Automation, Laxmi Organic, Suryoday Small Fin Bank, Nazara, Anupam Rasayan. All of these are hitting this week in various stages. Which of these looks exciting to you?
So obviously the argument that I placed in front of you tells me that, or tells our view is that you should go for a Nazara from a choice perspective among all of these, because Anupam Rasayan or Laxmi Organic are traditional old economy kind of stocks. There is nothing much to choose from in terms of technology. There are humongous choices available in the chemical space or the specialty chemical space already in the listed universe. So why should one go for an IPO of those kind? So I would pick a Nazara. Maybe Craftsman Automation would be the next, is what we would pick. But you should remember, in the backdrop is there's also an opportunity available for many of the investors to look at these companies post the IPO listing, because the stocks do tend to go up. That is what we have seen even post listing.
Yeah, Mrin, I'd love to get your perspective here, because retail investors just love IPOs. At the back of the mind, there's always this idea that you're entering at the ground floor. and things can only go up. Now, the past has shown us that that's not necessarily the case. While there were some blockbusters in 2020, there were others which were maybe overvalued or not that exciting for investors once they actually listed. So what would be your guide to approaching IPO season, so to speak, and picking out winners?
Well, I would say don't invest in IPOs. And the reason being because all the reasons that Mahantesh said, that, retail investor doesn't have any way to figure out these companies' financials. I mean, I know the financials are available, but how many retail investors can actually understand these financials, and how many of them can really think about how these companies are going to do in the future, and are they going to be sustainable as well? So, a great product may not necessarily be a great stock. And I think a lot of the investors who are doing IPO are thinking of these quick listing gains. There is this huge FOMO factor that's also there. So if you've missed out some of the other IPOs, there's this big FOMO factor of missing those out as well. To my mind, I think that a retail investor, and in any case, the allotment is not really very great given the number of times it's getting oversubscribed. So I think a retail investor is actually better off putting a money in a mutual fund and letting a professional fund manager actually decide which IPO to go in for.
Yeah, Mahantesh, you want to comment on that? Do you agree with that point of view?
Yes, to some extent, because what has happened is that for the retail investor, an IPO allotment is more or less like a lottery. You get it or you don't get it, right? And yeah, for those a little above the retail category, which is the HNI category, the allotment is proportionate basis, and therefore, given the large oversubscription, your actual allotment is very small. Therefore, the best strategy would be for retail investors would be to actually look out for quality names within these companies and look at bargains on the listing day itself, because you have on one hand on the listing day a pre-opening market where the stock typically the pricing or the price band is opened up and it's free to move in irrespective of a price band. And post-listing, there is a 20% kind of cap. I think there is enough headroom available to make your gains during that period, not just wait for the listing pop-up, and need not necessarily go through the listing process. The only good news about for retail investors is that since you have an ASBA kind of application, you're not really committing your money full-fledgedly behind the IPO, and the money blocked is just for a few days. So that's the good part. But listing day, you can hunt for bargains is what the theme should be.
Mahantesh, also your take on the way some of these issues are priced. Are they priced fairly, you think, or are they taking into account the atmosphere we're in, where markets have run up a fair bit and you have new blood in the game, so to speak, because you have a fresh load of retail investors who are keen and looking for opportunities?
So IPOs have a valuation justification. If you go through the document, right, that is a justification provided for the valuations. And very often the justification is based on peer valuation. That means peer companies trading in the market. And when you have the market already trading at high levels, at high valuation levels, obviously the valuation of the company that is hitting the IPO market will be high. So there is an inherent disadvantage that we see in the IPO market, because most of the IPOs will come when the market is so-called hot. When we say hot, it means that the valuations are stretched. So from purely a fundamental perspective, that's not the time when retail investors should be investing in an IPO. Therefore, the study behind in terms of your financial prospects, outlook ahead is very, very important. So having said that, IPO do come during market highs and market peaks, and we just can't help it. Is there fairness in that? Probably the fairness would have come if the price band would have been much wider than what it is now. But on the other side, on listing day, the price band is not capped, so investors can take advantage of that pre-listing pre-listing trades that happen.
All right, so it's going to be an interesting time going ahead as the IPOs come in. Mrin, since you think that retail investors should avoid IPOs at all, do you have a view on the ones on offer right now, or you're not looking at any of them at this point?
No, I just do not recommend them because, the point is that even if it has a great listing, the point is that the allotment, in absolute terms, the amount of money that you're going to make may not be too much. And, the point is that how do you tie this in with your overall portfolio? I mean, you've got most investors who haven't even got basics covered on financial planning. So where do you tie in this piece with your financial goals? So, my view is that a retail investor should really stay away from these IPOs. And it could be a great IPO. All I'm saying is that I just don't think that they have the right information to make a call on whether this is going to be sustainable or not. And that's why I feel that, they should just be in other investment vehicles like mutual funds, which will make that call for them.
Yeah. Anyway, the call is up to you, the viewer, to see what works for you. We're giving you all the points of view possible. So thank you so much, Mrin and Mahantesh, for joining us on this chat today. Meanwhile, let me get my colleague Vivek Iyer in to take you through what the IPOs are this week.
Well, it's an absolute frenzy as far as the IPO market is concerned, or the primary market is concerned, given the fact that so many of the promoters at this point of time are seeing the fact that equity markets, which are trading close to the all-time high, market sentiment is very strong, and which is why so many of the promoters in the last month or so have decided to come out with IPOs. The incentive or the main objective of most of the IPOs, number one, has been either to fresh equity, which most of the promoters or most of the companies are looking to go ahead and reduce the debt. And the other important trigger for these IPOs is that a lot of the promoters are actually seeing that the OFS model, or the offer for sale, where they would be reducing their stake, would actually help them get valuations, or would help them get the amount of money that they wouldn't have got when valuations a lot lower just a year ago. 5 companies this week that we're talking about. Anupam Rasayan, this organic chemical company, was looking to raise close to 760 crore. Main objective of the issue was to go ahead and reduce the debt. Craftsman Automation, this particular company again was looking to raise close to 820 crore, a fresh issue of close to 150 crore, and an OFS of around 45 lakh shares. Laxmi Organic Industries, now this particular company looking to raise close to 600 crores, a fresh issue of 300 crore, and an offer for sale of an equal amount. Kalyan Jewellers, pan-India jewelry making company, quite well known. In fact, this particular IPO was expected to unlock value for other jewelry players like Titan included. Now, the fresh issue over here of 800 crores and an offer for sale of close to 375 crore, making this issue quite significantly large at 1,175 crore. Also, when you're talking about another company, Suryoday Small Fin Bank, now this particular company was looking to raise close to 580 crore, fresh issue of 248 crore, and an OFS of 334 crore is what Suryoday Small Finance Bank was trying to garner. Nazara Technologies, now remember this particular company backed by none other than Rakesh Jhunjhunwala himself, looking to raise close to 582 crore via the OFS route. It will be interesting to see how most of these issues actually see in terms of subscription, how exactly the kind of listing pop these issues see as far as the markets are concerned.